Today on the Road to Wealth, we are going to tackle what is a very important topic for you to understand. And that is, if you watch financial planning or personal finance or investing YouTube videos, and the content creator suggests a particular investment, do you or should you listen to that advice and act on it? That is the question. Now, this can also be the case with a family member or a friend. Could be a trusted friend or family member, and they make a suggestion. XYZ stock seems like a great buy. It's likely to go straight up into the stratosphere. So buy it today and get in when you can. The question is, should you listen to this advice? Or if it's someone, even with a very popular YouTube channel that deals with investing or personal finance, or any other related topic, and they suggest a particular stock or exchange traded fund or mutual fund or real estate trust or any kind of investment, should you act on that information? And should you go out and buy that stock? Now, this is a more complex question than a lot of people might realize. And the reason for that, and this is something that those of us who have been in financial services know all too well, is that every person's situation is completely unique. You cannot, in good conscience, make blanket recommendations to people without knowing their particular situation. It's irresponsible. Just recently, I was watching another YouTube content creator who recommended a stock that is coming out as what's called an IPO, an initial public offering. It wasn't a pure initial public offering, but it was a stock that had been private, that had not been available to the general public, which had been announced would be available to the general public. And the content creator was recommending it to his listeners or his viewers, those people who are his subscribers or viewers, anyone that watches his channel. In very broad terms, he was recommending, in his opinion, that this may be a great buy. And I recall reading through the comments, as I actually often do and review the comments, that one lady that is a subscriber to his channel said that she had very little money to invest and no investment experience, but did the content creator think that this was something she should do? And the person answered her and said, yes, you can go out and get yourself a brokerage account and then go out and buy this particular new issue. I had to poke my nose in and respond or reply to this lady that she may want to think twice about doing that, but she might want to increase her investment knowledge and continue learning as much as she can about investing and about the stock market and other markets, including IPOs, and maybe gain some more knowledge before just jumping into something like this that could be very risky. And believe me, IPOs can be very risky. In some cases, let's say if someone got into Facebook when it first went public, and they held on to the Facebook stock, they made out very well. I can remember buying Facebook when it was an IPO, I think at around $30 a share. I haven't looked in a while, but I think last time I looked it was somewhere around $235 a share. So some people can do really well with IPOs. In some other cases, a stock can become public. Some people jump into it right away, watch it shoot up, and then those people who have no intention of holding that stock, maybe they're day traders or others, take profits, and the stock goes right back down the other direction. People often lose money. So what we learn in financial services, and in my case I was what was called a principal, so I was supposed to be in the role of supervising other people that deal with the public regarding securities and investment products and monitoring what they do. And at one time during my career, I was even what is called a compliance manager, which are the people who are assigned to protecting the company, keeping a close eye on the stockbrokers or the account executives or whoever is in direct contact with the investing public, and protecting the company and making sure that that those people are the people that are selling the investments or recommending the investments or talking to customers walk a fine line, that they obey all the rules that the regulators have for them. And in my mind, the more important thing was in that role to invest to protect the investing public, because you have to assume that the average person out there really doesn't understand the complexities of investing or the financial markets, and if they don't, they stand to lose a lot of money, and this can't happen. So that has been embedded in me for many years, to make sure that the investing public is protected and that they don't jump into things that aren't appropriate for them. There's actually a rule in the financial services industry that's called Know Your Customer or Know Your Client. And what that rule says is that you should, as a person in financial services making recommendations, you should thoroughly know your client's circumstances. You should know their other investments that they might have. You should know their tolerance for risk. Can they handle volatility in the market? Can they afford to experience volatility? Can they afford to lose money? How do any investments that you might be recommending to them fit in with the rest of their portfolio of investments? Does it help balance out that portfolio? Is it a suitable recommendation for that person, depending on all the things I just mentioned, as well as their investing timeline? Are they someone that might be retiring next year, and recommending a volatile stock to them might be a bad idea? These things all have to be taken into consideration. You can see it's much more complex than it would seem. It's not just a matter of telling people this is what you should do, you should invest in XYZ stock. And this is the problem with many YouTube channels. You have people, in many cases, that may have good intentions. They may feel strongly about what they're recommending, but the thing is, their backgrounds may not be in financial services. They may not have had passed securities exams and been taught about how you deal with the investing public and what considerations you have to have before making any investment suggestion or recommendation. So in the case of the example I used with this lady who is responding to this recommendation to get into this IPO, it may have been a very unsuitable financial suggestion or recommendation in her case, because, as she stated, she did not have much money to invest, which means that she definitely cannot take on the risk of losing money. And she mentioned that she did not know a lot about investing. I recall years ago when my stepfather still had some influence over my mom's investments, or at least he gave her recommendations. And she had some investments in some 403B plans with some underlying what are called sub-accounts, which act like mutual funds, which can be invested in the stock market or the bond market, or just in different kinds of fixed money instruments. And I remember him telling her that a particular fund that was an equity or a stock fund had performed really well the year before, and so it offers a very good interest rate, as he said, and so that is something she should get into because the interest rate is so high. Well, of course, because a fund performed well the previous year that is invested in the stock market, it's based on the capital appreciation in that fund and any dividend reinvestments. It has nothing to do with an interest rate per se. So that wasn't accurate information, and that is not an accurate understanding of how that particular investment works. And in the case of that particular year, with my mom, the stock market took a big dive that particular year. I think it was back in 1987 when we had Black Monday, and October 19th when the market took a big dive. And for people that were invested in fixed securities or money market instruments right at that time, they were far better off. For people who did suffer through that big sustained drop in the market, which took a couple of years before things were back to where they were previously, those people had to know that if they were already realizing losses on paper, they needed to just stay in the market and not pull their money out with a realized loss. So the point I'm making with this video is that if you are listening to someone that has a personal finance or investing channel on YouTube, or a family friend or a family member, and they do not have a background in financial services or formal training in what you need to be considering when you're making recommendations to the public, the general recommendations that aren't tailored to a person's particular circumstances, then this is like caveat emptor, right? Buyer beware. Don't take the advice. Do your own research. Find out as much as you can about whether or not that stock or mutual fund or exchange traded fund or whatever the investment is suitable for your situation. Determine how much risk you can take, how much you're willing to take if there's a lot of volatility in that particular investment. Are you going to be up at nighttime knowing that it was just down 20% the day before? All these things you have to think about. Now, a lot of the stock brokerages, a lot of the big firms like Schwab and others will actually let you place a trade without charging you a commission. So this has been a great trend, and it makes it easier for people to invest in stocks without having a lot of additional cost. So that's always something to look into too. If you get in with a Schwab or a Fidelity or a Vanguard or Ameritrade or any of these companies, check out what the commissions or fees are related to your investments. so that you're not having those things erode your investments. So please put your experiences in the comments. Let me know what has happened to you. If you've had good experiences through people recommending things on YouTube, if you've had bad experiences, those experiences would be great to share with other people. But just remember, don't just jump into something that's an investment because somebody on YouTube recommends it. Even if they seem enthusiastic that it's a hot buy, do your own research. And if you're able to, find a good financial investment advisor who has a good track record. And those people generally, if they're what are called fee-only investment advisors, will work off a percentage of your money that they manage. So they have a good incentive to see your money grow. And they can take into consideration a number of factors. So hopefully that's helpful to you. Please subscribe to this channel. Please hit the like button if this is information that you find useful, and pass this along to other people you know so that they don't make a mistake and lose money. Thanks for watching The Road to Wealth, and we'll look forward to giving you some useful information in the next video. Take care.